Okay, traders, today is Monday. It is June 25th, 2012. It's about 2:21, 2:22 p.m. afternoon OST, and we are looking at what the markets should do over the next few days based upon what they've shown us since we started analyzing on Saturday, Sunday through Monday. Traders, I presented a video to you on Saturday morning. In that video, I stated this is the leader. We should really be paying attention to the leader. This day was not in there. I stated that the leader got through the OMNI average but failed and broke down and is now on its way to the 200 bar. And if that's the case, the followers will likely follow it down. Our analysis showed us that the inverted head and shoulders, which did work, got us all the way up here. There was a nice rally that came from the inverted head and shoulders. It absolutely did work. And then it started to fail. And this is the leader, as I've contended, right? So let's add today back in and see what we get. You add today and Monday and look at the breakdown that ensued. Now we are below the 200 bar moving average. And the followers, I assure you, are going to follow the leader. That's what a follower usually does. Traders, as we know, futures trading can be extremely risky and can cause substantial financial loss. We do know that futures trading is not suitable for all trading accounts. And if you do not recognize a stop as your best friend, you certainly can't be in this game because it's brutal and it is dangerous. But if you use stops, if you understand the risks, use your technical analysis to point you in the proper direction. So here we are. We contended that this was pointing us lower, delete today, and that the S&P and NASDAQ would follow, add today back in. The leader clearly did point us lower and broke down through the 200 bar moving average. So I say, obviously, we stay with this mindset, being that it started Sunday into Monday morning. And let's go look at a few more charts. Dow Jones Industrial Average, traders. The very same thing happens here. You do get the rally out of the inverted head and shoulders, just like you did from this head and shoulders. Big rally, we get another inverted head and shoulders, and a rally ensues. But look at how it stops cold here at the OMNI average. Look at that. It just stopped cold, hit it 1, 2, 3, 4 times, and broke. Now it's down out of what we thought would have been a channel that would have continued to fill in for a while. And like the leader, it's a follower now, like the leader did, is heading towards the 200 bar moving average. Remember, the leader already got there. The follower is on its way. So the Dow Jones Industrial Average showing us that, yes, it will follow the tranny lower. Then we take something very interesting like the NASDAQ. Traders, on Sunday night's OMNI, before markets opened, we put this very same chart out before you. We left a question mark inside of this circle, and basically it looked like this. There was, of course, no update for Monday yet. So what we had was this. And what we put in the OMNI was, it looks to us like multiple head and shoulders patterns are forming. If that's the case, on Monday, we're going to have to drop down into this shoulder. So here we are doing analysis on Saturday and Sunday on this day, not knowing what will come Monday. But if we do enough analysis, we should have a good idea what comes Monday. So I was brazen enough to put this out on the OMNI with an empty circle and state that we will have to drop Monday if, in fact, we want to continue with this head and shoulders pattern that looks like it's going to build. So we add Monday back in, which is today, and here's what happened so far. Here is your day. The update is in place. We did drop into the shoulder so far. If we are now going to fill in this shoulder, we should spend a few days ricocheting up and down in here. So we should probably get a few days that will look like this. We'll get, just days back and forth. I don't know exactly how big they'll be, but we should just play herky-jerky inside of the shoulder for a little while. And then when it finally breaks, the likelihood is the break will now be down here. Because you will have an inverted head and shoulders, which did rally. Then we had an upright head and shoulders, which will turn into a bearish move. And this whole package fits inside of our time frame. The time frame is between May and August. We usually have a seasonal drop in the U.S. indices. That is a perfect setup for a seasonal drop to continue, right? It's been dropping basically since May began. Look at this. This is the beginning of May. Down, 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 down. And we had a little bit of an upswing right back down into the seasonal, and down we should continue. So that's what I'm expecting out of the NASDAQ using the analysis and, of course, lots of other things. But the analysis that I'm showing you right now is a big piece of why we do expect the right shoulder to fill in. Let's go look at another chart. Okay, traders, looking at the E-mini S&P. Remember that I put this chart in front of your eyes and said we did get the rally from the inverted head and shoulders, right? Shoulder, head, shoulder, rally does ensue. However, Thursday's sell-off has negated this rally for Friday's trading. Then Friday comes, the rebalancing of the Russell comes, the market rallies up a little bit, but Omni states, I do not like what I see. I do not believe in this Friday rally, and I think the market will go lower, and that's something that we put out on Sunday's Omni. Here we are. If we erase what happened today, boom. We fell out of the channel that was created up until Friday's close. We did fail at the Omni average. That was the big kahuna, I guess, to point us in the other direction. A lot of it happened in one day. We didn't really get a chance to see it fail a fourth day, have a small day, and then break. It broke all at once. Friday, we had a small rebound. On Monday or Sunday night, I was absolutely ready to jump right back into the short side, and here we are. So the short side is where the market looks like it wants to go. And remember, let's go back to the leader now. DJTY, your tranny, was the leader. The leader broke down, failing at the Omni average, does what? Pierces the 200 bar moving average, right? That's what it does. It pierces the 200 bar moving average. Let's go to the follower. Where are we now? Look, heading down towards the 200 bar moving average. So the follower should do what the leader did and knock us all the way down to here. So that's what I'm looking at for short-term trading when you look at U.S. indices. Let's go look at a Dax chart. Traders, looking at this Dax chart, it breaks down below the bullish channel when today, Monday, breaks below the bullish channel. Now we remove the channel out of the way and see what's coming next. Maybe it's this. You have a shoulder in place now. You have a head, and the very, very, very good possibility that this shoulder will now want to fill in as well in your DAX. Remember that we are now heading back down below this trend line, it looks like, so we'll remove that as well. And here is where we stand. We take a larger trend line, we move it out across the tops. Boom. Look at this. Right back into this channel. Stops cold here. This now becomes the bearish channel because it's much larger. And we'll even make it blue just so that it's consistent. And here's your larger channel now, the bearish channel, which it fell at right here and is on its way to fill in this shoulder and probably come down to this trend line. What's interesting about that trend line is it brings us to previous lows. Boom. They come together right down here. You see that? So DAX absolutely looking for downside as well. DAX does not look any prettier. Let's go look at our dollar. Traders, the dollar index, look at the size of this channel. It's just breaking out above. Some may call this a huge bull flag. You just give this a flagpole, right? And that's a huge bull flag. You know, when I think you get something that big on a daily, I don't know if it's one big formation. That's too big of a formation, if you ask me. It's a bunch of smaller formations in there. But you could look at that as one big bull flag. I don't know that that's what it is, but it's certainly a channel that was moving down that has now been broken out of, and we are heading back higher. That is certain, and we are likely now going to start some kind of a channel in this direction. So let's see if this is the new channel that's going to pan out for us. And now that we've broken out of this one, we can lighten it up a little bit and take this new blue one a little more seriously. So there's your dollar, and that's pretty strong looking chart when you consider that it starts all the way down here and just works its way higher. Opposite of your dollar, and by the way, strong dollar means what? Weaker indices. That's what's been happening. When the dollar goes up, indices go down. Dollar is threatening to go higher, indices are threatening to go lower. This picture makes sense. Euro. Exact same opposite of the dollar is the euro. Was in a channel moving higher, has now pierced the low end of that channel and is looking horrible. This market clearly looks like it's going to want to go lower, and maybe, just maybe, this is the beginning of a new channel moving lower. I don't know that that's what we want to call it yet, because that channel doesn't really fit well, but maybe, just maybe, it's going to continue on this downward spiral now. So euro moving lower does work in tandem with the ES NASDAQ moving lower and makes sense with the dollar moving opposite. So there is a decent picture of what's going on with our indices. Then you have bonds, which completely confusing. Look at this insanity in bonds. You have an upright head and shoulders, which should be bearish. You have a bear flag, which should be bearish. Even if you want to extend this flag out here, it's a bear flag, which absolutely should be bearish. But bonds, for whatever reason, and obviously the Fed being in there to such a strong extent, don't want to hear anything about the downside and just seem to want to move higher. So bonds not helping the technical picture except for this. Bonds have been strong. Bonds seem to be staying strong. Bonds don't want to hear about technical analysis. Bonds are saying, look, the Fed is so big that not even the technical analysis that will work almost anywhere seems to work on this market. Why? Because you have an entity bigger than the market itself. That's the problem when you have something like the Fed who prints its own dollars in a market. The Fed is so big that if they want the market higher, they print more dollars, they buy more of the bonds go higher. They're bigger than the market itself. So is analysis working well on bonds? I wouldn't think so. I think trend line analysis is decent on bonds. I don't think any of the other stuff that applies itself in other areas works as well with the bonds right now, because Operation Twist, because the Fed is bigger than anything else in the world and they're just controlling the bond market. For many reasons, the bond doesn't give us any indication except for it's holding its own and likely will want to go higher. So, in fact, if we look at the bonds on a weekly, you will see that it's not in any jeopardy of going down right now. These bonds are in no jeopardy of going down at the moment. On a weekly chart, they look very, very strong. If that's the case, it makes our stock market move lower for now. At some point, that relationship is going to change. We'll deal with that as it starts to change. At some point, the dollars moving higher will make stocks more appetizing. You will see, but that's another adventure for us to go on when the markets get there. But remember that at some point, the dollar moving higher will make the stock market move higher as well. Another lesson, another time. Let's move forward on this analysis. So there's your weekly bonds, and they don't look like they're going down at all. Then you have this. You have the CRB index. CRB index is in a spiral right now. Yes, it's gone up with the grains for the last few days, but you know what? I think this up move in the grains is false because of this. You're in a bear flag in the CRB index. The CRB index on a daily bar chart is showing us that it really doesn't want to go much higher. Take this out to a weekly. The CRB on a weekly at the 200 bar is questionable. We need to see what it's going to do. Look at the miserable failure at Otatma before the break. Now it's stuck at the 200. If, in fact, you get below the 200 on the CRB index weekly, that will make this market and the other markets come right back down, the grains. Look at the soybean trade here. Look at this monster rally that we've seen in the soybeans. Holds Otatma and explodes. We had 3 closes below Otatma, so we went short and the market exploded on us. That was a bad trade, so that did not work. However, after the explosion on Otatma, I mean, that's pretty strong. However, there's a big report coming out tomorrow. In fact, there's a big report coming out this afternoon in the grains at 4 p.m. OST. So I'm thinking that this in the soybeans and this in the wheat. Let me show you this one. This monster move in the wheat and this one in the oats, as well as this one in the corn, may very well be false moves that are only moving higher for this big report to come out this afternoon. The corn especially catches my attention because look at it right here on the daily bar, about to hit the 200 bar moving average. And let me tell you what happens when it hits the 200 bar moving average usually. Look at the end result. It's not usually a happy event when the corn market on a daily bar hits the 200 bar moving average. We're about to do that now, right before a big report's about to be released. I find that completely suspect. I'm suspicious that they're rallying the corn. It'll hit the 200 bar just on time for the report, and back down we go on Tuesday, Wednesday, Thursday. Now, that's my 30 years of experience speaking. Right now, the analysis is still pointing higher, and I'm not going to call the downside. But if and when we fail right here at the 200, I'm calling the downside then. Let's see what happens when we get there. Traders, remember this. This is what we are steeped in now. The NASDAQ daily bar failed at OTAPMA, broke down, is filling in what we thought would be a right shoulder and should continue to fill that in. Then the end result is more downside to finish off the summer seasonal. Traders, thank you so much for coming to today's class. I hope this class will help to keep you in tune with where markets are going on a short-term basis, and I hope this helps to keep you and your confidence level high in technical analysis. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.